Hello traders. The title of the video is how to combine Elliott wave structures with market patterns. Let's get started. We're on a quarterly chart, and we want to combine the Elliott wave price structures with a market pattern. Now, the most important thing I want you to remember in this tutorial is that there is a big difference, all right, between the price structure and the market pattern. All right. So the first thing that we have is what we call the market cycle. So the market cycle, all right, influence the market patterns. All right. And the market pattern will influence the price structure. Now, if you can remember what I've just said, you have made a big progress. So, there is a market cycle that will determine the market pattern that will be formed, and the market pattern will determine the price structure. So, why this is so important for an Elliott wave trader to understand? It's very, very important. Is that most of the Elliott wave traders usually will concentrate on the price structure, and they will ignore the market pattern and also the market cycle, because we are talking about Elliott wave price structure, zigzag pattern, flat correction, triangle, combinations, triple tree, and so on. All right, the impulsive waves, the corrective waves. All right, but those are the price structure. All right, the price structure. But apart from the price structure, we want to know in which order should we use those price structure. And as I explained to you at the beginning of this year, our number one aim this year, 2017, is to help traders to become a better Elliott wave trader, which means trader will be able to start avoiding trading mistakes, all right, and started making better trading decisions, all right. So this is so important to understand. There is first a market cycle that is underway, so the beginning of everything. So you see on the 5-minute time frame, 3-minute time frame, it's all started from there, but there is a cycle that is forming, a bigger cycle that's been formed, all right. But then as that cycle is underway, we will see different market patterns. So a bullish cycle will have more the bigger part, or the main part of a bullish cycle will be a bullish trend, yes or no? All right. So the bigger part of a bearish cycle will be a bearish trend. Now, so as the cycle is underway, we will see, like here, we know that the Elliott wave cycle is formed of the trending phase followed by a correction. We also know that a correction can be a complex correction, all right? It can become a long correction, a consolidation, all right, and so on, a flat correction, a triple tree, and so on. So, but until the correction is finished, all right, the cycle is not yet finished, all right. If you look at this chart, we are looking at Southwestern Energy Corporation, EPIC SWN, and I'm on the quarterly chart, no monthly chart. And you can see that there was this bullish trend here. The bullish trend is highlighting, okay, the rising channel, and the rising channel is a market pattern. So a cycle is underway, and the bigger part of that bullish cycle is the trending phase, which is in a rising channel, and the rising channel is a market pattern. Now, as the trend has reached its peak, we have now a consolidation here, which is another market pattern. Now we are seeing another bearish channel that has been formed, but we don't know whether the cycle is yet finished until a new trend is underway. But a trending phase followed by a complex correction or a normal correction, all right, is what we call a cycle. In talking about Elliott cycle, there are other cycles in the market. But I'm talking here about the Elliott cycle, multi-wave plus correction. But the cycle will be formed of different market patterns. So rising channel, declining channel, declining channel here. Now this is we have three market patterns in place right here. But those market patterns, so the cycle first, then the market pattern, and then the price structure. Now, each market pattern, within each market pattern, we will see different price structure. All right? The multi-wave is likely to be in a rising channel, in a bullish cycle, and the multi-wave in a bearish cycle will be in a declining channel. All right? And now, but the reason why I'm recording the video is that you don't want to forget that though we are using the Elliott wave price structures, we want to understand how everything is connected. The cycle, the market pattern, and the Elliott wave, okay, the 13 specific Elliott wave a pattern. The Elliott wave rules are at the bottom of the whole, okay, phenomenon. A cycle is underway, and that cycle will be formed of different market pattern. Those market pattern will influence the price structure. So whenever we talk about a corrective wave, that's why we say we ask always the question, what is it correcting? All right? Okay? Then when we are talking about a cycle, we want to know whether it's a bullish cycle or a bearish cycle. And the bigger part of a bullish cycle will be the bullish trend. And so on and so on. So looking at this chart here, you may say to me, George, why are you seeing all this? I get it now. You will see that after the bullish trend, the price reached the top, and we have a consolidation. Now, suppose you were here, you didn't know, so a lot of area where trader, what usually happens, trader will start drawing line, they say, okay, it came down once, and it bounced up here, probably a flat correction is underway. All right? So somebody may say, all right, George, it looks to me like a double retracement, though I can't see 1, 2, 3, 1, 2, 3. But the first thing that is coming to my mind at this point in time is a flat correction. We will see whether it's going to come down 1, 2, 3. George, I told you here, first move down. Here it is, second move. And then normally, the third move should break below this one here. If there will be 1, 2, 3, 4, 5, the third move, usually the longest, should break below this low. But here it is forming a double bottom. You remember what we talked about before? When we see a double bottom, you need to be careful. All right? Now, it forms a double bottom right here. All right? So, it's a cycle point, yes or no? So, you see 1, 2, 3. Now, you see a double bottom here. You see anytime you are counting where you see double bottom, you know that something is going to change. Something is going to change here. There's a high chart that we may see a reaction that we are not expecting. All right? But suppose you understand what we were talking about before, the cycle, the market pattern, and you draw your channel like this. So at this point in time, as the price pull back like this on your quarterly chart with a long tail hanging here like this, you know that there's a high chance, there's a support in this zone that the price may consolidate. But if you just sell and expect it to go down more, look what's happening here, you just stop here. But you can avoid that area wave trading mistake instead of just relying on the price structure by understanding that there is a cycle, there are market patterns that are in place, and you want to know which market pattern do you have now before you rely on your price structure. So using the Elliott wave pattern without paying attention to the cycle first and the market pattern that are taking place is like using the Elliott wave theory blindly. All right, that's all. That's all. So draw your channels. Ask yourself, which cycle do we have here? Which market pattern do we have? A cycle can be formed of different patterns, different market patterns, but those market patterns will determine, all right, the price structure. So this can also help us to improve our area wave analysis, because a consolidation can be prolonged for some time, can go on for some time before the price will come down. All right. Now, as I told you before, because we understand this now that when we see a double bottom chart pattern, another thing we can do is to just cover it. It's a cycle point. So do like this. Now what is left is that we have 1, 2, all right, 3. Now this one up, all right. So it's a consolidation. 1, 2, 3. It's going up. So now the price is coming out of the channel. So it's a complex correction that is underway, and the price was horizontal, the market pattern. So suppose you get confused here and you don't know what's happening, what kind of pattern is being formed. Your expectation was first a flat correction. Now you see the consolidation that is being formed here, and you are wondering what's going on. You may be thinking that, all right, this stock may break above the consolidation and form the ABCD chart pattern. But those are just expectations. But you want to concentrate, you as an area wave trader, you want to concentrate on the price structure. By aligning the price structure, but one must align the price structure with the market pattern to avoid trading mistakes. All right. Now, as you can see, the price ran down very fast. You see here. Now, can you see now? Can you see what's happening here? The price break below the consolidation and retest it here. You see the shadow on top of this candlestick bar here. Then it came down. That's the third one now. And now it's the fourth one coming down. And here it is. We will be expecting the fifth one down. So, in fact, it is a flat correction, but the double retracement has been prolonged because we have a market pattern that was horizontal. So, you want to remember that your price structure depends on the market pattern, and your market pattern depends on the market cycle. Now that the price out of the channel, what do we need to do? Where are we going? Okay, no possible reversal point. Use the market geometry. Measure the width of the channel and project in the direction of the price. That's the support level. First projection. And the second projection. Right there. Okay, I can't see the lower part of somewhere down here. There's a support there. Somewhere down there, okay? This is support. And anytime you project a channel, you want to know where is the median line. It's a median line, okay? Remember that this is not the lowest part of the channel, it's somewhere down there. So the median line probably is somewhere here in this zone. All right? The market cycle will influence the market patterns, and the market pattern will influence the price structure. For an area wave trader, using the price structure, he or she must align the price structure with the market patterns and the market pattern with the price structure. A bullish cycle is the bigger part of the bullish cycle is the rising channel, the bullish trend, and the bigger part of the bearish channel, a bearish cycle, is the bearish trend. A correction will always correct a trend. So, talking about the area wave cycle is formed of the trending phase and a corrective phase. We do not want, as an area wave trader, we don't want to forget the price structure. We don't want to forget the price structure, the market pattern, and the market cycle. This will help us to improve our area wave count and also to avoid wave trading mistakes. If you have any question or suggestion, please put in the comment section. And of course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about how to combine Elliott wave structures result, okay, with market pattern, how to combine Elliott wave structure with market patterns. Happy trading to you all, and speak to you soon.